fair market prices, dividend distribution, and the remaining cash, have they been able to deploy it into other spheres of business? And whether these companies have been able to make much higher returns on the redeployed amount. That's a question. A lot of companies have done that. In fact, one company that always comes to my mind is ITZ. It's a cigarette company, and it's part of the sin goods industry. They had to weather lots and lots of problems. Values, it had come down to 150 rupees some months back. I think now it's crossed, 200 rupees or something, 200, 205. But the company has a huge potential. They were able to diversify into other areas. They knew how the market is moving, and they rode the wave. In fact, you look at the international history, you have any guess a sin good company which has been continuously figuring in the global Fortune 500, the top ranked companies? Philip Morris, a cigarette manufacturer, in spite of being in the sin good industry, no company has been able to dislodge that company from its top list. Of course, ITC is diversifying into many other things, your Ashirwad, FMCG, your hotels, etc., etc. But cigarette, I think, still continues to be their main line of business. I think 75-80%. But they keep their ear to the ground where the market is moving. E-Throttle, one of the greatest initiatives of ITZ. So we need to consider these factors, starting from quality of business, the nature, quality of management. Third is in terms of how they look at growth. And fourth is how is the company, how well the company is able to look at opportunities outside the company. But at the same time, how well they are able to leverage their internal sources in terms of employee training, lay strong foundations as far as the internal organization is concerned. So when you look at external growth, lots and lots of companies are there. So one company that comes to my mind is Bharti Airtel. How well they've moved out of the country in terms of exploring new markets, especially when you talk about internal strength. Shri Cement is a company that comes to my mind. Even Motilal has talked about it. They have delivered excellent returns in the last 25 years. In fact, cement industry has not been doing very well. In fact, it's one of the poor industries. Infrastructure boom was there in early 2000, 2001, golden quadrilateral. Vajpayee ji had come out with all these infrastructure projects. But after that, infrastructure companies have been going for a toss. There's been literally no growth in the cement industry, but Shri Cement has been an odd man out. So irrespective of the industry you are in, irrespective of the sector you are in, if you have a good quality of business, good quality of management, the growth mindset, a passion to do your business, your integrity, then any company can be successful. The sector, of course it matters, but it's not a major factor, I would say. If you have the other pieces, of course on condition that if you have the other pieces of the puzzle properly. Now coming back to the $1 million question, in terms of how do we pick those companies, how do we select those companies, a little bit of data crunching is important, especially in this technological age with all these free gadgets, your free bandwidth. I don't think it's difficult. There are a number of sites, moneycontrol.com, your NSE data, NSE, your HDFC, ICICI Direct, Zerodha, volumes and volumes of information available. All the data is available, but you need to have the patience to sit and analyze. Are you willing to do the hard work? Because most people don't want that. People want to sit in front of the television, listen to some expert is saying, buy the stock, put the stop loss, and they follow that blindly. I have nothing against those experts. They are highly qualified, expert people. Many of them are my own friends. But playing the stock market is not as easy as sitting and advising people buy this, sell this. You need to have a proper understanding, okay? You need to have a proper understanding. I always keep in mind the example of a chess game. In chess, there are various levels. You start as a beginner, you become an amateur, then a professional, then a master, then a grand master. 5 levels. What differentiates each of these levels? A beginner is not able to look beyond the next one step. He's unable to think beyond that. Amateur is able to say 2, 3 moves. Professional, 4, 5 moves. A master is 7, 8 moves. But a grand master, he looks at 14, 15 moves, and he has an approximate idea of how the chessboard will look like in the 7th or 8th move. The coins are the same. The power of each of those coins are the same. The board is the same. Everything is the same. But when the grand master plays, there is a 99.9% probability of him winning the game. The same thing holds good in the share market. But how do you pick? But for that, a lot of hard work is necessary. A lot of experience is necessary. Practice is necessary. Enormous practice. Stock market is not as simple as taking out your phone and go to a stock app, download a stock app, look at some graph, last 1 month, 6 months, look at candles and then deciding on the stock. That's not a way to play the stock market. Had it been that easy, everybody would have made millions. But people have come to the streets. People have lost lakhs and crores. People have blown up crores of rupees. Share market is like a bomb. Somebody doesn't wield that properly, it might blow up in his face. That's the nature of this market. Let me tell you that. Share market. None of these calculations are 100%, but things are evolving. In statistics, we have something called as a probability. The probability is what works. Bayes' theorem, Pascal's wager, right? In the context of options trading, if you can say that I see a probability of Nifty going up by say 10%, and I see a probability of X percentage of Nifty going down below 13,000. If you have this probability, then you play between these two. That's option chain. You have option interest, you have implied volatility, a lot of other things. So everything is a question of analysis, your fundamental analysis, technical analysis. But it's not very easy that you sit in front of the television, watch a few things and then start. No chessboard is the same. There are 70 million permutations and combinations in a chessboard. There are hundreds of factors, affecting the progress of the game. Same thing holds good in the stock market also. So many factors. So the way forward, how are we going to identify? Today, it's very difficult for us to figure out how many of those companies that are existing today will exist in 2045. A lot of things are being discussed. ESG is another thing people are talking about. Environment, social and governance. This is the fact for the next 2-3 years. I'm sure it will go on for the next 3-4 years before any new fad comes into the market. So if you think in terms of the way forward, we talked about some of the lowest common denominators. So if we can think about some companies like Kotak Mahindra, your ICICI, your HDFC, your Bajaj Finance, these are companies that have given extremely good returns to their shareholders at one point of time. Very diligent. They were very serious about the work they were doing. Secondly, they had to compete with the nationalized banks, the state banks of the world, the Punjab national banks of the world. They were all nationalized banks and they had to compete with them. But they put in systems in place. They improved their customer service. And what is today in front of us, data speaks very clearly. And probably that was the reason why these companies came up to this level in the last 15 years. The question is, will these companies survive the next 25 years is a question that comes to our mind. But if you look at the records, the manner in which these companies have grown in the last 10-15 years, that momentum is enough to keep these companies going for the next 4 or 5 years. There are other companies also, because the market always rewards hardworking companies. If you look at some of the key drivers, the digital technology is taking shape now. There are lots and lots of startups coming up. You have companies using artificial intelligence, your machine learning, your big data analytics. These are, I think, the things that will drive the future market. Your driverless cars, your electric cars. These are the ones that are going to drive the market in the next 10, 15 years. Let's see how things will pan out. We've talked about ESG, economic, environment, social governance. Now, a lot of people have a question. They are asking if the valuations today are huge or not. Valuations are not huge, as per many experts, including Motilal Oswal, Ramdeo Aggarwal. We've already come back to the stage pre-corona. We've just come back to that level. So I don't think there is a need for anyone to talk about a crash. Because if you look at a year-on-year basis, it's not even 10%. It's somewhere around 7 to 8%. Corona was just a blip on the radar. Don't give too much importance to it. Some news are coming, probably another variant of corona is coming, UK, etc., but they're all small factors. If you talk about evaluation of some one or two companies, the same survey has thrown up this data. If you look at Infosys, the earnings have been 33% year-on-year CAGR. But if you look at their prices, it is just 30%. So obviously, you cannot say that the valuations are high. If you do the same analysis for Pidilite, it's around 25 against 23. If you look at Aisha, it's also following the same trend. Shree Cement, I think somewhere around 19% profit after tax, and 20%, 22, 23% increase in its prices. So nobody can say that the valuations are high, at least at this point in time. So one can safely say that these trends will continue. The valuations are not very high. We're looking at $5 trillion economy in the next 4 or 5 years. When these extra 2.5 trillion, you can see the amount of wealth creation. And where will this wealth go? It has to come back to the stock market. There is no other place where this wealth can go. We have the right government in the right place. The government is announcing very forward-looking policies and budgets in the last 2-3 years. Extremely forward-looking budgets, your GST, your demonetization, etc., etc. There are various opinions, but all said and done, the country is moving forward. Foreigners are willing to invest money in our country. The interest rates are low. If you look at the FDI investment in the last 1 month, it's mind-boggling. It's touching 1 lakh crores, my dear friends. 1 lakh crores has come into India, and that is the nature of stock market, and the going is going to be very futuristic, very optimistic. Now it remains to be seen how many of us are going to ride this wave. So this is what is important, and we need to put our wind in the direction of the sails. We shouldn't be talking the same old story. For example, many of us say that when we joined Maruti, if we had invested this much money on this, we would have earned this, So these are some of the pitfalls. For example, even if you look at, one minute, I wanted to share certain other important things that have happened in the last 1 year, right from the January 2022. I would like to share certain points with you, very extremely interesting points. That's it. I think I've almost completed everything that I wanted to say, and it's a great initiative. I request all of you to watch it and then send it to people, your well-wishers, and enjoy. Let's end it with a dance.
Jerusalema ikayalami ilondoloze uhambe nami nishilana Jerusalema ikhaya lami